Welcome back on this channel, Bratan. There is a huge concern that we could face a huge sell-off from the Bitcoin ETFs. We saw yesterday, here you see it, we had 54 million Bitcoin sold yesterday by FBTC, BIDB. So after this positive week, which we had an increased inflow in Bitcoin, we had in the last 2 days a little bit inflow and then a negative inflow. Maybe there is justified the concern that we could face a huge sell-off from the Bitcoin ETFs because they're holding right now altogether around 70 billion worth of Bitcoin, which if they're deciding to sell, like we saw it also yesterday here, 25 million, 5.6 million, 24 million. We had also bigger numbers here before on the 23rd October with over 100 million. Then we could see a massive dump in Bitcoin price because we know it's highly correlated. If we are pulling out here the Bitcoin ETF inflow, which you see, this is the red line here, and the other bars are the other candles are the Bitcoin price. You see it's exactly following the Bitcoin inflow, Bitcoin ETF inflow. The more Bitcoin ETF inflow we see, the more the price increasing. The more outflow we see, the more we see the Bitcoin price is declining. And we have another huge concern. It's the S&P 500, which breaking this rising wedge to downside, which is a bearish pattern, which is very dangerous. And we see here the weekly candle, we closed extremely red. You know, we have today Sunday, Friday, the stock market closed. And the even bigger concern is this yield inversion, which is turning here to the upside. And exactly in this moment, when it turned to the upside, historically, we saw always a massive dump happening. I can show you exactly here. You see it here. It happened in 2007, and it happened also exactly the same in the 2000, around 2000. You see here exactly when the yield inversion difference happened. We saw here a dump in the traditional market, and the S&P 500 happened, and right now it happened exactly the same. And we have a second factor. This is the federal fund rate cuts. And we saw the same happened after we saw yield inversion, the yield inversion difference. We saw also the rate cuts happened. We saw it in 2000, we saw it in 2007, and what we see right now, we see exactly the same. And in exactly 5 days, there's another rate cut happening to 450 basis points from 475 basis points. So we see here, if history repeating, we could see a massive, huge black swan event. We saw here the stock market dumped in 2000 by 50%. In 2007, we dumped here also by 50%. And if we would see right now again another dump by 50%, this would lead us to S&P 500 of around 3,000 points, which would be extremely bad also for Bitcoin, because the Bitcoin price is also highly correlated with the stock market, the traditional stock market. You see here, if we compare the Bitcoin price with the S&P 500, we see exactly when the S&P 500 is pumping, Bitcoin is following. If the S&P 500 is dumping, we see Bitcoin is following. And we had here in the summertime, we had here a little bit of some difference, because we saw here the stock market rising, but the Bitcoin price was declining. However, you see it's perfectly following. On the big picture, it's always perfectly following. We see here the market is pumping the S&P 500, also Bitcoin is following. So this could be a huge danger. Watch out for this. Hopefully we will survive this. Hopefully we will not see this happening, because, you know, we have the election, and in 5 days, if Trump will win, probably we will see a massive pump in the market. Not in the immediate short term, because usually it's sell the news event, but in the big picture, in the midterm and long term, we could see pump in the market, because obviously this is not what he wants, that he's getting elected, and we see all the market starts to dump. Another big thing, what we see here a so-called inverted hammer candle. It's exactly what you see it here right now, even though we broke out of this channel. And this inverted hammer candle usually shows us a trend reversal if it's in a downward trend, but not if it's in an upward trend. And we have here an upward trend, and we have this hammer candle happening at the all-time high. And usually, as I said before, it indicates a trend reversal. So it should mean if we are closing in 1 day and 13 hours, this as a hammer candle with a long wick, with the body down below, then this could mean we see here a massive dump in the market. How low we can go, I will tell you later in this video, because you know I have some positions open, some long positions, and this could be very concerning. I mean, there are some levels, some major levels. If we are watching where's the biggest volume, we see the biggest volume coming in at 54K. It's starting at 64 approximately. Here you see it at 64 approximately, the volume starting. Then the next line, the next big support line would be here at 54K. And this is also exactly where we saw in the last days or in the last weeks, where we saw the support coming in. The support come in always between 50 and 54K. You see it happened in July 2024. It happened in August 2024. It happened in September 2024. So these are the major support levels around the 60K area. You see a major support happening, a major volume at the 54K. And the worst case, obviously, it's here around 44K, where we have massive volume coming in. Between these levels, we could see a massive drop in the market. So right now, what we could expect in case this hammer candle will work out, and in case all this black swan event scenario happening, we could see a very quick dump to the 60K area. You see here, in case we cannot hold the 60K area, we will see another, wait a minute, I will move a little bit. We could see another massive dump, because there's not much volume coming in to 44K. And if we're breaking this 50K area, if we cannot hold this, then there's not much volume again. The biggest volume coming in 44K. So these are the major support lines to watch. But let's not be so negative here right now. Let's speak also about the positive things which we see here. And we see here in the previous summer, we had a sideways consolidation for 219 days in the last year, 2013. After we broke out heavily to the upside, and right now we again for around 219 days, a little bit longer in consolidation. And I checked also the history of Bitcoin, what we had in the previous months. I mean, what in the previous years, in 2019, in 2020, and we had the same. We had here in 2020, before the bull run started, we had also again a consolidation, which was a little bit shorter, but then we had the massive breakout to the upside in the summer 2020. And in 2019, this was the only exception when we had also in the summer 2019 a long consolidation, but then we broke to the downside. But out of 3 times, we had 2 times a breakout to the upside. So it's interesting what will happen right now, because we should see in the next weeks a decision if we see a massive break to the upside or if we see massive break to the downside. So it's getting very interesting. And another thing on the positive side is in the last days we saw a massive positive apparent Bitcoin demand, which we didn't saw since February 2024. You see it here, this was the spike, and we touched this line again. So what we saw after, you see here, this white line is the Bitcoin price. After we saw the spike in the Bitcoin demand, we saw another massive pump in the Bitcoin price. So what we could see right now also is a massive, in the immediate short term, a massive pump in the Bitcoin price, as we see the Bitcoin demand is rising like crazy. I mean, we had here the summer, again here, the summer hole where we didn't have really Bitcoin demand, but right now the price action, the massive price increase supporting also Bitcoin demand, which we didn't have, for example, in July, as you see it here. We had a massive Bitcoin spike, the price spike, but we didn't have any Bitcoin demand. So this looks nice. On this side also, we see here the open interests are increasing, And usually it's not a good sign, but if it's in a combination with the Bitcoin price increasing, it's a very good sign, because we see here the Bitcoin traders are interested in supporting. They're betting on the price action to the upside, which is very nice. And historically, if we see Bitcoin price increase together with the open interest increase, we usually see some more pump to the upside, which also supporting my theory, which I told you in the last days, is that we see massive liquidity up to 75k here, up to 75,500, even a little bit higher, I think, around 70. Let me check here. Yeah, it's massive. You see here millions of liquidity here, up to 75,800. I mean, the massive liquidity ending at 74k, but we could see 75,800, and this supporting also the immediate short term with this open interest rising, with this Bitcoin demand rising here, what we saw in the last days, that we could see still a pump to 75k. But we should not forget that we still have also all this liquidity on the downside, which is again in the midterm, where we could see a massive drop in the Bitcoin price down to the 65k area, as I showed you in the big picture, where we see a massive support coming in at the 65k, massive volume, then 54 and 44k. But in the immediate short term, we still could see here a pump to 75k. Also, we see here the total crypto market cap cool down a little bit, and we could see another retest of this resistance line on the total crypto market cap, which would be around 4%, which could indeed bring the price of Bitcoin to 75k or a little bit higher before we see another dump happening. And the worst case is here $1.7 trillion total crypto market cap. The last time we touched this $1.7 trillion market cap was in August 2024. And August 2024, we saw the Bitcoin price was exactly at, I tell you in a second, in August 2024, the Bitcoin price was exactly at 48k, which again would support the theory where we see the biggest volume coming in at between 54k and then at 44k, which is very interesting, because you see here, this was the spike which we saw. Boom. I mean, we still closed the candle above 54k, but there was a spike down to 48k. So it's getting very interesting, in my opinion. And now we are coming to my opinion. In my opinion, we will see a clear, we will see in the next days, because we see also the RSI. Wait a minute. Here we see the RSI on the 4-hourly. If we are zooming in, we see a bullish divergence on the 4-hourly. It's exactly, wait a minute, here. You see the RSI is going down. The bullish divergence you measure always from the downside, but the price going up, which speaks for another leg up to the 275k area. Also, it seems like we are forming here in the next days a golden cross in the next hours, which is also a bullish sign that we could see Bitcoin up to 75 or even 76k before we see another drop of Bitcoin happening. And I'm expecting also 75, 76k area, and then a drop to the 61k area, at least to the 65k area, but then also 61k. If we cannot hold the 61k area, I'm expecting here down to 54 and then 48, 44k area. This is the worst case, 44k area. Important, here are my trades right now, and I am, you know what I'm doing? I'm doing $100,000 challenge for myself. The last month I did, as I showed you also yesterday, I did 45k, and this month my challenge, the November challenge, is $100,000 in profits with my trades. I am right now on a PEPE long, which is right now $44,000 in a loss, and my GME position is right now $8,000 in a loss. But with my theory that we could see here Bitcoin spiking up to 75 or 76k, we could see also PEPE pumping and GME. GME depends on Roaring Kitty if he's posting something, but PEPE is ready to pump, in my opinion. We have here another position on BITGET. It's $10,000 in a loss. If you want also be in this in this challenge, or do with me this challenge. We have also here a leaderboard. In October, the leaderboard number 1 was Snowflake. If you want, you can join on BYBIT. Is the second biggest exchange in the world, and BitGet is the 4th biggest exchange in the world. So you can join through my link, and you will be automatically in our November leaderboard, and you can win here, for example, an iPhone 16 Pro Max or a remover luggage, and you get paid in USDT. So this is nice. Another thing regarding PEPE, why I think we could see here a pump in PEPE, is if we are watching the open interest, they cool down historically. They cool down exactly to this levels where we see usually another pump happening. I mean, we could see a little bit more. We could see a little bit more cool down here, but usually when we're touching here this line, we see here, you see, boom, pump. We're touching this line, we see a massive pump. Again here, we're touching the open interest, this support line, we see again a massive pump. You see, always when we're touching this line, we see massive pump, and we are ready right now to pump. The open interest is so low. It wasn't so low when we've been at 0012. You see it here historically. So in my opinion, this is a very massive indicator that we will see a huge spike to the upside, and the spike could happen as high as, where we have here PEPE, as high as 107. This is exactly also where my exit price would be, because my entry price is at 10, as you see it here. This is maybe where we'll exit, but we could also go as high as 1.1 here approximately. Why at 1.1? Because at 1.1 we have massive liquidity, which the market maker could grab, because they tend to grab the liquidity, and we're watching every day, we're checking the liquidity. It's not changing, even though it's changing every second. But if the more we are zooming out, the more we can be confident that this liquidity will not change. You see here starting the liquidity at 100, and it goes up and ending the first chunk at 105. This is where I could possibly exit my position in profits, or in the best case we're going to 112. If we're going to 112, this would be even better, because then I could exit, for example, this position at 112, which would be around $9,000. Around $10,000 I would make profits. Then I have left only for this month $90,000 to make profits. But we have also still the 2nd November only, and I'm pretty confident, or I hope that I will manage it to make profits. So my strategy on PEPE is here, either, it depends on the Bitcoin price, either to exit at 107, where is my entry position, or if I see Bitcoin price is still consolidating or pumping, then I would wait until reaching 112, 117, something like this. And this is where I would exit, and waiting for another dump, because expecting Bitcoin to dump at least to the 60K area, and would re-enter here at 083, the first chunk, then at 077, and then here at 067. So this is my strategy. I'm trading on BYBIT and BitGet. What do we have else? We have also, on the positive side, for you to know, the Bitcoin in Google Trends is still on extreme historical low, and it's exactly in correlation with that we are shortly before massive bull run. You see here in 2020, we've been exactly at the same level before we saw a massive bull run, even though we saw some dip here, and this exactly dip what I'm expecting here, where the interest is going down because the Bitcoin price is going down, but then we saw a massive pump in the market. So this is what I'm expecting here a little bit more pump, a little more interest, then a dump, and then we see the real bull market happening. This will be historically the biggest bull run ever, because we have here the Bitcoin ETFs, and the Bitcoin ETFs controlling exactly the Bitcoin price. And I am expecting, or I'm pretty confident, that we will buy in the future much more Bitcoin and Ethereum, even though Ethereum looks right now not nice, because obviously the ETFs, the Ethereum spot ETFs, not buying so much Ethereum, but this will change, and soon it will change. We see also a massive spike in the Ethereum price, because right now they're holding only $7 billion of Ethereum ETFs. Thank you everyone for watching. I kiss you and I see you later. Mwah.